Thank you, Pierre. It gives me great pleasure to welcome Mike Colyer, CEO at Foundry. Thanks for joining us, Mike.
Yeah, absolutely, Paul. Glad to be here.
Great. So Foundry is actually established recently, or about a year ago, and it's under the DCG, Digital Currency Group banner. Just for our viewers that might not be familiar or so familiar with Bitcoin and Ethereum mining, probably heard about it, but don't necessarily understand the mechanics. It's grown out of literally people's bedrooms 8 or 9 years ago into a multi-billion-dollar industrial business that's in some people's eyes is consuming too much energy. The actual demand that network kind of creates in terms of that energy cost is really a direct function of the price of Bitcoin or Ethereum. The higher the price goes up, then more profitable miners can become. Then that kind of attracts more miners into the network, and those guys need to finance hardware. So, Foundry was established with this in mind, looking at the infrastructure, and not only on Bitcoin mining and proof of work mining, but with Ethereum moving over to proof of stake in the near future, there's a whole load more infrastructure to support there. And DCG as a company has a whole bunch of portfolio companies and clients that probably have an interest in this area. So with that in mind, Mike, can you just kind of give us a little preview on why DCG set up the company and you joined as their CEO, and what opportunities you're spotting?
Yeah, sure. It's great to be here and excited to talk to your audience and share kind of our vision of where the future's going. So I've been in the mining space for about 3 years. I spent 20 plus years of my career in kind of what I call the old world: manufacturing, distribution. I was a hired gun in the private equity space, and about 3 years ago jumped into the crypto markets and fell in love with the mining aspect of it, because I really felt like we had to build out the infrastructure before this could really scale. Mm-hmm. And it reminded me of the start of the internet back in the early 90s. I was in college when like Netscape came out, and it was just felt like this solves a lot of stuff that couldn't be solved with the current technology. So I kind of dove into the mining part of the world, and about a year ago, a little over a year ago, I got a call from Barry asking to come on board to run their new business called Foundry. And DCG had avoided the mining space really for the last 6-7 years. It was really kind of the wild, wild west, and it just seemed like a tough place to do business. And then about a year and a half ago, Barry went to buy some machines to mine an algorithm and realized that it was still, the wild, wild west. And it was one of these moments where he said, you know what, it's time. It's such an important part of the overall ecosystem that it was time for DCG to get involved. And it's been great. It's been a wild 12 months. He basically gave me a white sheet of paper and said, all right, figure out where we can leverage the DCG balance sheet, its brand, its portfolio companies, and where can we add the most value in the mining ecosystem. And we're really focused on proof of work and proof of stake. And, we firmly believe that more institutional players are going to be coming to this space. They're going to start recognizing the opportunity. And we wanted to help provide solutions to make that transition happen even faster. And we're looking at really, how do we grow hash rate in North America to continue to decentralize this Bitcoin network throughout the world?
Yeah, absolutely. Thank you for that. I mean, I recall at our early Coinscrum events back in 2013, we used to give the audience a demo of how to build a home miner using a milk crate and a GPU. And it's changed a lot, I guess, since then. So
yeah, and it's amazing how fast the field evolves, right? So when I started in the middle of 2017, we grew like a mining facility from 1 megawatt to 3 megawatts, which seemed like this enormous project at the time. And now we're looking at sites that literally have 100 megawatts worth of machines on them. And that's what people are planning for going forward. And it's amazing. It's amazing.
Yeah, no, absolutely. And I think to that point, 100 megawatts, I don't know if anyone's seen, a facility of that size, but, I visited a couple and, or getting toward, not even that size, but, maybe a third of that size. And it's kind of, it's some serious infrastructure that needs to be built out. If you're going to have more 100 megawatt facilities, that's a huge amount of capital that's required to fill that. And as I mentioned earlier, if the price of Bitcoin keeps going up, that's just going to be pulling in a demand for more capital because the profit incentive is going to be there. So maybe we can touch on, as you've entered into this market over the last year, I assume there's definitely demand. The miners will definitely want to kind of finance their infrastructure on debt. So can you kind of give a profile of the typical client that you're speaking to, the jurisdictions, and what you feel the size of the addressable market currently is?
Yeah, so a couple items. When we looked at this blank sheet of paper and said, where can we add value? We wanted to bring more hash rate into North America. And, all the machines are manufactured in China. It's difficult to get to the front of the line to get the latest and greatest. So we decided that we could provide, we wanted to help miners in North America, right? So what we want to do is provide the capital to them so they could get to the front of the line first to get the machines so they can grow their hash rate, right? So we're going through this technology shift, right? The newest miners are out. They're much more efficient than the old miners, and everyone has to upgrade. And so when we started looking at it, we said, hey, well, let's build a business around equipment financing and using the equipment as collateral, which has been a huge success. We also mine ourselves. So we have our own fleet of machines. We don't have our own facilities today. What we do is we partner with, trusted host providers throughout North America, where we can develop a relationship and we've got skin in the game, right? So as we work with other people that want equipment financing, we say, look, we're using the same machines. We understand the market dynamics. We understand, the risks here. We're participating with you in this process. And then we provide advisory services to folks. So as more institutional money, as people like to say, come into the space, we can help them navigate the pitfalls of mining, right? Like you only have to make a couple of mistakes to lose your investment. Mm-hmm. But if you get many of the key points correct, it's a great business.
Sure.
Go ahead.
No, so I was just going to ask, come back to that. I mean, so you're focusing on North America and, again, back to the Wild West point earlier, how have you seen the market change? And, if you're lending money, even if it's secured against their hardware, if you're lending money to people, then, your kind of due diligence process needs to be good. And how have you seen that changed? And what are your criteria if you're going to be engaging with people?
Yeah, so it's a great point. And so for us, we're very careful on who the end miner is, right? So we want to work with folks that understand the risk of the space, that have some experience in it. We're also very particular in terms of where the machines are located, because the installation of those machines, the timely installation of those machines, as well as keeping them up and running is critical, and the underlying cost for running them. And then we only work with particular machines. So we're only doing new generation machines. We've right now been focused on Bitmain and MicroBT because they've got the best equipment available out there. So we're very selective in terms of who we're willing to work with. And we typically, have a lower limit of about $1 million. So we're not doing smaller deals. Mm-hmm. And then, in terms of how big we'll go as big as, the credit of the counterparty will allow us to go.
Sure.
So these are big projects. They require a lot of capital. But we've got very strong relationships with MicroBT and Bitmain. We've worked really close with them to secure supply of machines. I think that's probably the biggest thing that's different today versus maybe the last cycle is there's a there's a limit on the wafer production today,
Yeah.
which is changing the dynamics a little bit. And I think will change the dynamics at least for the next 6 months, where Samsung and TSMC just are not giving the same allocation as they have in the past. So for the best performing machines, there's a limited supply, and it's really hard to get your hands on them.
Yeah, I saw a note that there's a 6-month wait, or you know, if you don't have your orders in, you're not getting anything before April next year now.
Yeah, that's exactly it. Both MicroPET and Bitmain for their best units are pretty much sold out through April. And look at the last time I checked, Bitcoin price continues to go up. So yeah, there's even more and more demand. And this is what part of what makes the industry difficult is you have to place your bet 6 months ahead of time. You have to put your money down 6 months ahead of time, and there's a lot of risk with that, right? You hope that the equipment manufacturers will honor your order. You hope that they ship on time, and then you hope that they get installed on time. And I think that's one of the different things right now in the cycle is there's actually been a lot of capacity built out in North America over the last 3 years. So we were kind of late to the game, I would say, in terms of building out large scale mining facilities. But 2018, 2019, and 2020, there's been a lot of construction built. So there's a lot of space available for equipment. And now there isn't a lot of equipment out there.
Well, I guess, I mean, people try and kind of use analogies against, commodities mining, physical commodities mining anyway. And I guess, from the miner's perspective, yes, there's a time to go and buy new hardware, especially if it's new generation and you're going to get kind of major improvement in efficiencies and mine more Bitcoin. But I guess there's time, and only time, I guess, will factor or learn this over time, that there's times to step back and just invest in actually building the infrastructure, because the other, you might have a wait time on getting your delivery of new hardware, but also if you want to go and build a 100 megawatt facility, that doesn't happen overnight. You've got, 6 or 9 months or whatever, at a very minimum, if you're prepared to go and build that out.
Yeah, I think one of the key things is absolutely understanding the cycle of the mining industry. And it goes through a cycle, just like any commodities type mining goes through cycles. I think our cycle is much faster than the other cycles. So you have to be you have to be quick. And just like commodities, I think a lot of times you have to bet counter-cyclical too. So in January of this year, when all the online mining calculators said it was not a good time to buy machines, we placed enormous bets on procuring equipment, and that equipment wasn't going to arrive until May. But we bought a lot of machines. I mean, we have deployed over $100 million into North American mining ecosystem.
Wow.
And we had the latest generation of machines plugged in May, and we've been mining with them since May. And those machines are worth more today than they were when we bought them.
Yeah.
So I don't know how people don't think mining is a good investment. It's been a great investment, and it's going to continue to be a great investment for the next 18 to 24 months.
So just back to, just interested in terms of, you're financing firms into the tune of $100 million so far. And then you mentioned your relationship and your orders you've made directly with the manufacturers. How are these loans structured? Are you kind of bringing them onto your balance sheet and then leasing them out, or are you actually directly lending to companies and to manage the relationships?
Yeah, so today our equipment financing, we use the equipment as the collateral. We require the customers to put some skin in the game, so typically 20% down. We'll finance equipment for 12 to 18 months. And the idea is, hey, get the equipment, get it plugged in, and let the equipment pay for itself. And that's been our strategy from the very beginning, and I think it's been very miner friendly, right? We're miners, we understand it, we understand how the system works, and we're trying to create products that work well for miners.
One thing I've thought about, because I mentioned much earlier in the conversation that up until now, early miners kind of who kept hold of their Bitcoins, some of them didn't, and they failed early on, and the right strategy was to hold the Bitcoins. Maybe that was right then, and it's not so right now. But, those companies or firms that have survived manage to kind of, fund their future expansions on retained earnings, or maybe having to, as I said, raise some capital, giving away equity in their company. Do you think that financing, because obviously there's probably some other firms that are looking at this as well and getting into the market, because there's going to be probably enough demand for everyone or a few people to come in and service these needs. Do you think there's a risk around effectively, if you're offering up financing on hardware, I mean, no miner is going to say no if they can basically get into the market quicker. Do you think there's any risks around kind of, front loading the hash rate into the market, if you like, if other people are borrowing all around and then all of a sudden more hardware is coming online then can maintain profitability for everyone, because if everyone comes online, then, with the dynamics and economics of Bitcoin mining, everyone's profits will get squeezed. Do you see that as a risk?
I think because this market goes through these cycles, there will definitely be points in time where it'll be overheated. Mm-hmm. And that's exactly what we'll see, right? Mm-hmm. We kind of went through that in, the end of 2017, early 18. That dynamic was a little different because the manufacturers were delayed in shipping their hardware. There was a delay because there was no place to plug in the hardware, so a lot of people waited. So you kind of saw like hash rate grow a lot after Bitcoin price was coming down, because the orders had been placed 6 months prior. Mm-hmm. In today's market right now, the limiting factor is really the wafer production, mm-hmm. as far as we can see. So there just isn't, I agree with your premise. If there was unlimited amounts of machines and then we had this debt financing available, we would see hash rate growing at a much, much faster rate. Mm-hmm. Today, you just can't buy the machines. So maybe 2 years from now, that will be the case when they've got a bigger wafer allocation and mm-hmm. there's more machines available. Can debt financing kind of overheat it? Absolutely. Mm-hmm. But today, it's a great way to secure equipment mm-hmm. and grow your mining facility faster.
Sure, cool. Well, I think we could talk about proof of work mining all day. We could, but look, another area that you're looking at, and we've seen a few networks come online in the last couple of years that are have started experimenting with the idea of proof of stake, which is far more energy efficient. Open debate about the long run, and that it's got to prove itself in the wild in terms of security, but things have been working so far. So in terms of what you're looking at in the staking side of the market, what's your plans there, and what are you doing for people that are looking for exposure there?
Yeah, so in the last 12 months, we've built, we continue to build out our team, right? So I think we're up to about 14 people now. So we've been growing pretty quickly. Part of the team's focused on proof of work. The other part's focused on proof of stake. To be honest, that wasn't a big, strong suit of mine. Like, I'd spent most of my 3 years on the proof of work side. So the last 12 months, I've been like reading and soaking up as much as I can on the proof of stake. And so a couple takeaways from that. One is, a lot of these projects have been around for a while, right? They were announced back in 2017. And what I don't think people realize is, for the last 3 years, even though we went through like crypto winter, these teams have been building, and they're all getting ready to launch now mm-hmm. Their networks, which is really exciting. And I don't think a lot of people appreciate how much work has been done around some of these. And we just saw like Filecoin go live mm-hmm. finally. There's lots of those examples, and kind of our job is to be the infrastructure provider for DCG, for DCG portfolio companies. So we're, and by the way, other institutional investors that want to get involved in proof of stake, mm-hmm. they're not going to want to do the hard work of learning how to do the actual staking and the infrastructure of that. So that's what we're doing. We're building out that expertise. We're building out that infrastructure so we can provide those services to others. Mm-hmm. And there's a lot to learn. It's still, I don't know, maybe it's like Bitcoin mining in 2012, mm-hmm. like it's still very early stages.
Yep, I'm sure we're probably
it's here to stay. It's not
Yeah,
going
no,
away.
absolutely.
It's
But I
here to
mean,
stay.
again, as a company, as Digital Currency Group, you know, you again, within that portfolio, you've got Grayscale, you've got Genesis. These guys are dealing directly with institutional investors. And in the current environment around the world, of pretty much zero, if you're lucky, if it's zero interest rates, if they've not gone negative, then, you know, I mean, if we leave maybe DeFi aside for now, but just the idea that the staking is kind of a yield generating instrument, you know, what are you seeing in conversations with that type of client? Are they like, well, you know, if I can go and earn 6-7% by staking Ethereum, if I hedge my Ethereum position properly, I mean, that's a great yield compared to anything else I get. Do you see, you know, is interest building around that, or people understanding that?
People are just starting to understand Bitcoin and
Right.
the rest of the world, right? Like
Yeah.
sometimes I feel I feel like I'm in this like echo chamber of the crypto Twitter verse, right? Where we're all so familiar with what's happening, and the rest of the world, like my neighbors still don't understand it. You know, so we are at the very early stages, but it's happening fast, and I agree with you. People are going to be looking for yield, and there's some really good solutions out there to get some yield. By the way, we didn't talk about this earlier, but I think Bitcoin mining is essentially a yield product, and I view it as like a utility. Like you should, if you're getting into Bitcoin mining, think you're going to get rich, you should just go buy Bitcoin. It's way easier. But I do think if you manage it properly, it becomes you kind of get a dividend from the mining on a regular basis. And I think there's going to be other options with proof of stake to do the same thing.
Completely. I think exactly that. It's infrastructure at the end of the day. I've kind of used that analogy over the years. You know, that's how, you know, look, volatility, and people that say, well, these things are too volatile, you know, as these things become more prevalent and more widely adopted, then volatility will decrease. It won't disappear completely. But absolutely, if these networks become essential for commerce in our everyday lives, then they're pipes at the end of the day. You know, someone had to go and build pipes to you know, so we got water in our homes, and build kind of, you know, electricity grids. So we got electricity pipes into our home. If you know, if the monetary function and that service is essential to everyone's and everyone and commerce in general, then, you know, exactly, that's what it is. It's a utility function. So yeah, it's going to be interesting to see how that plays out. Mike, look, it's been an absolute pleasure talking to you today. I could carry on for a lot longer, but what would be good is that we can just invite you back for some updates further down the line. It'd be lovely to have you back on the show. Thanks for
absolutely. Thanks for the invite, Paul. It's been great.
Thanks, Mike.